man, another roller coaster week for Bitcoin. Falling here to the downside with another red weekly candle. But is 25k and 20k now an inevitability? Are we going to be dumping more here on Bitcoin? Is more pain expected to come? What a crazy week. I mean, just look at this candlestick here. You can see this big wick to the upside showing the excitement we had when Grayscale won their SEC case in their lawsuit, right? They have to go and review that in order to grant them a spot ETF. We then had the SEC later in the week coming out and delaying all the applications, including the BlackRock spot application. Now, of course, that should have been expected, but like I've explained, a bunch of leverage in the system is creating a lot of volatility in this space. But the story we need to look at, we need to take away all these wicks, take away all these extremities, and try to understand where do we sit in this market. And that's what I'm going to break down for you guys here. If you appreciate this type of content, even on a Saturday, smash up the likes. Don't forget to subscribe. We are just a day away from this candlestick closing. And as you can see, now this will be the third weekly candle we'll be closing below the weekly EMA ribbon. You can see we're trying our best to hold some support around these levels, currently sitting just shy of 26k. But the reality is, are we likely to head down to 25k here and then 24k? If we zoom out here on the weekly chart, you guys remember, I've been warning about this big, horrible M pattern. We do not want this to play out. If we fall down to 24.8, this M pattern will officially play out, and that could spell a lot of pain for Bitcoin, okay? So again, I just want to remind you of that. If you take this, you go up, you come down. You go up, you come down. When you come to the neckline again, this is an M pattern which can break down and bring us down to some painful price targets back below 20,000. And that could spell a lot of pain for Bitcoin. So keeping things very simple here. I'm looking for pullbacks. I'm waiting for a pullback. I'm not expecting this market to just rally immediately to the upside. That being said, I have to be in the market, right? Anybody who tries to time the market is going to get burned. And that rally we saw around Tuesday, Wednesday time when we got the Grayscale announcement should remind you of the impetus crypto has. People are waiting on the sidelines to jump into crypto. That retail FOMO is waiting because they've seen every cycle beforehand and they know this Bitcoin will tear faces when it's ready. So the cat is out the bag. The secret is not there. The hard bit is trying to remind yourself and train yourself from a psychology perspective to buy when people are fearful, right? And right now you can see here in the crypto market cap, you can see the fear and greed index sitting here at 39. It's still in that fear territory. I know it's not extreme fear, but people on average are not buying than right now, right? So I want to remind myself when things get painful, if we're falling down to 20, if we lose 20, I've got to train myself to go and add to my positions. Don't be fearful. Don't panic. This is going to run up to the upside once things start to improve. And speaking of improvement, we did get the labor figures, right? The non-farm payrolls did come out. And we can see now that the US indices, the traditional finance, moved really well this week. They're their best week since September, moving really nicely. So they've done really well. Now, if you look here, the non-farm payrolls came out. Unemployment rate ticked higher to 3.8% versus 3.5%. So there's more unemployment in the market. Remember, Jerome Powell wants a bit of unemployment. So this is actually a positive. I know it sounds weird. On the other hand, average hourly earnings increased 4.3% versus the 4.4 expected. So remember, if earnings go up, inflation goes up. People are earning more money, they spend more money, inflation goes up. So it's good that that's cooling off. That's showing that inflation is cooling off a little bit. But then the jobs came in higher than expected. So in other words, Jerome Powell's managing to get the impact he wants of bringing inflation down, of getting the unemployment figure up slightly, getting the average wages down slightly without sacrificing the number of jobs available. So that's a positive for him. And you can see that the markets are taking that in a positive manner because now 94% of the market, only 94% of the market are pricing in a pause at the next meeting on September the 20th. So in other words, we're getting closer, guys. We're getting really close to this pause. I just want to re-emphasize the fact that we're at the final innings of this rate hiking cycle. It's been tough. It's been hard. If you look at when crypto's done really, really well, it's when monetary policy is loose, when the government is your friend, when the Fed is your friend, they're printing money, they're making money really easy to get a hold of. Everybody's feeling wealthy. Right now, Jerome Powell does not want to be doing that. He wants people to feel poor. He wants some people out of a job. He wants you not to be spending to bring inflation to the downside. But when this comes to an end, when he starts breaking it, you can see unemployment starting to creep up, you can see GDP start to struggle, then they're going to come out and start printing. So they have to break stuff before they start printing. And it's while they're breaking stuff, when everybody's fearful, when things aren't looking great, that I want to be adding to my bags, right? I want to be adding to my positions when everybody else fearful. When the run-up comes and they start printing again, Then we're going to be triggered into our next bull run, the Bitcoin halving, and things should then start to propel to the upside. That's my game plan. Now, again, coming into the charts, I'm expecting a pullback, right? We're below our EMA ribbon. We're struggling. If I drop this down to the daily chart as well, you'll see exactly what I mean. Look at this. We're getting rejected here from this daily EMA ribbon, right? We had our move here intra-week here on the green candle, and then we got shunned straight back to the downside just 2 days later, moving us here. So we're showing a lot of weakness here. We tried to hold support around that 26 level. We fell below it yesterday, and now we're expecting more pain here to the downside. So I'm looking for 25. You guys know I'm also looking for other price targets. Let me show you my other label chart. Let's see if I can pull that up for you guys. This is the chart I want you guys to monitor, right? Let me just get this set up for you guys. You guys know we're falling out of this channel. The first price point is this purple line. This purple line, 24.8, is the neckline of the M pattern, right? The M pattern I'm explaining, the neckline is at that purple line. If we break down from there, then we start looking at the next price target, right? It's not fun. What's the next pivot point? Next pivot point is here. That is exactly there at 19,900. Call it 20,000. Then if we lose that, then we're playing for 16.5 and really falling to the lows, which we hit just before the turn of the new year in December of 2022. That's my game plan. Following each of those ladder points, knowing that we're breaking down from this channel, it's not going to be easy. We're going to have to stop the bleeding somewhere. Now, that could require a macro catalyst. It could require the approval of a spot ETF, which doesn't look like it's going to come this side of this year. Or it could be any other catalyst, right? So that's why I want to be locked and loaded in my positions, because you don't know what it could be that starts to move us to the upside. Good news will start to come. We've been through the bear market. We're still going through the last innings of the bear market, but more positive times are coming. And it's important that you don't lose faith in crypto right now. I've done this before in previous cycles and I've regretted it, right? It's that final despair, depression moment. You guys have seen it, right? The Wall Street cheat sheet. It's the same for the traditional markets as well. It goes into euphoria, then it comes into greed, then it falls back down again and despair, and then everybody gets depressed. And just when you're depressed and nobody cares about it, boom, the price starts to go. And you don't want that feeling. If you remember that a couple of days ago when that grayscale pump was happening, it was going insane, 7% in a day. And if you ever doubt that, just go back to when Bitcoin was running in 2021 and other bull markets, and just look at the green candles. Look at the weekly candles as well. And just ask yourself, wow, that would have been crazy. 10% days, 12% days, 13% days, after day. Just green candle after green candle. Everybody FOMOing in. There's no pullbacks then, right? So when you get these opportunities, you've got to ask yourself, 25,000 Bitcoin, do I like it? If we fall to 24,000 Bitcoin, do I like it? 20,000 Bitcoin, do I like it? And if you like those levels, ladder in your buys, right? Ladder in those buys. Even if they don't execute, at least you've got some limit orders set where you can trigger some purchases and start adding to your Bitcoin portfolio. So there you have it, guys. There's a roundup of where we're at here in the market on a Saturday. Not easy times, but definitely starting to really formulate our path for the next run. You can see Bitcoin, the bears are struggling to push us much lower. So we're already starting to create strength, even at 26. The price just doesn't want to go much lower. That being said, the structure, like I just shared with you, is getting me cautious for 24.8 and also cautious for 20K to see if we can get those pullbacks into these areas around here for a bit more nibbling. Hope you guys enjoyed this update. Smash up likes. Don't forget to subscribe. Don't forget to go watch this video on the second channel here. And I'll see you in the next one.